Welcome to this tutorial on how to backtest on Oanda, a popular online trading platform. Backtesting is a crucial step in evaluating the performance of a trading strategy, and Oanda provides a robust environment for doing so. In this guide, we will walk you through the process of backtesting on Oanda, covering key concepts, practical examples, and best practices. First, you need to have an Oanda account and access to the Oanda platform. If you don't have one, sign up for a demo or live account on the Oanda website. Once you have logged in, navigate to the fxtrade platform, which is Oanda's proprietary trading platform. To start backtesting, you need to define your trading strategy. This can be based on technical indicators, chart patterns, or fundamental analysis. You can use Oanda's built-in indicators and tools to create your strategy, or you can use third-party plugins and software. Next, you need to select the market data you want to use for backtesting. Oanda provides historical data for a wide range of currency pairs, commodities, and indices. You can choose the specific market, time frame, and data frequency that suits your strategy. Now, you can set up your backtest parameters. This includes setting the start and end dates for the backtest, the initial capital, and the risk management settings. You can also choose to backtest on multiple markets and timeframes simultaneously. Once you have set up your backtest parameters, you can run the backtest. Oanda will simulate your trading strategy on the historical data and provide you with a detailed report on the performance of your strategy. The report will include metrics such as profit and loss, drawdown, and Sharpe ratio. When interpreting the results of your backtest, it is essential to keep in mind that past performance is not necessarily indicative of future results. You should also consider the limitations of backtesting, such as the quality of the historical data and the assumptions made about transaction costs and slippage. To get the most out of backtesting on Oanda, it is crucial to follow best practices. This includes using high-quality historical data, avoiding over-optimization, and regularly updating and refining your trading strategy. You should also consider using walk-forward optimization, which involves optimizing your strategy on a subset of the data and then testing it on a separate subset. In conclusion, backtesting on Oanda is a powerful tool for evaluating the performance of a trading strategy. By following the steps outlined in this guide, you can create a robust backtesting environment and gain valuable insights into the potential profitability of your trading strategy. Remember to stay disciplined and always keep in mind the limitations and uncertainties of backtesting.